When I look around the trading space, I constantly see a pattern of people teaching you the wrong things that just simply do not repeat in the markets. People teaching you new things every single week. I've been teaching one candle theory now for 2 years straight, and today I'm going to give you the most detailed breakdown I have ever done for one candle theory. After watching this, there will be no more questions about daily bias and no more questions about how you enter within a predictable next candle. I've only up to this point given it to private students. Now I'm uploading it to YouTube so you guys can understand exactly how to predict the next candle and exactly how to pull real money out of these prop firms. Let's not waste any time and dive straight into this video. So what you'll see on my screen is a clear depiction of exactly what we are looking for to form. Now, there is a second way a predictable next candle can appear, which I will dive into later on in this video, so make sure you are watching the whole thing. First of all, on my screen, we have clear swing points, okay? And people ask me, well, can these form randomly? Can these form at random levels? The answer to that is no. These must form at key levels. So up here, in this bearish example, we want this candle to trade into a key level, or this candle. And here's what everyone gets wrong about this. There are two ways you can enter this. You can enter inside of this candle on a swing trade, trading this expansion, or you can enter on the wick of this candle here. There are two options, two clear options. Now, what does this look like in practice? Well, you have a low, you have a high, and then back down to that low is a market maker sell model. I'll give you guys an exact breakdown of how to get involved with that. But the reason this is so important is because this is a range. You have a range high and you have a range low. Now the market operates on ranges. Ranges repeat in the market, meaning when you take one side of a range, especially if it's in line with your higher time frame bias, then you are likely to take the other side of the range. With the range breakdown, how do we actually get involved to trade the range itself? Well, you have to either trade this candle or this candle. Now, this candle, the third one in this sequence, is the easiest and probably the most high probability. Depending on, and this is very important because I know I'm going to get questions on it, depending on the conviction of your daily bias, you can also trade this candle. So for example, if I'm very strong on my bias, on my weekly, my monthly, my daily bias, and I have a strong conviction of why price should move down, watch all my other videos for that explanation, then I can enter in this candle here with an SMT and an hourly change in the state of delivery if this is a daily chart. Okay, now we can fractalize this concept where if this is a 4-hour chart, then you can trade the 15-minute. Anyway, let's go on to the bullish example. So we take out a range low here into a key level. This needs to happen inside of a discount also. Then you can enter this candle, again depending on the conviction of your daily bias or your higher time frame bias, or you can enter inside of this. This right here, if I make this box orange, for example, this area from the open to the low of this third candle is the secret you've been looking for. Because when you're entering within here, you are getting a relative premium. You're getting a dynamic premium here. You're getting a dynamic discount here. And we look for a very specific thing to form within this candle's wick and within this candle's wick for you to enter. This is a mechanical trading strategy. It's extremely easy. The only discretionary part is the narrative and the story behind daily bias. So people ask me, how do we get involved with this candle's wick or this candle's wick? Let's take this example. This open will form like this, okay, where you have a accumulation, because price needs to accumulate positions in order to distribute it for the daily candle. People are buying and selling this. So when we do that, what happens? People buy more because we've broken out. So breakout traders have their stop losses where? Below here. When they buy the breakout here, they have it below here. Then we do what? We induce them in and drop. Because what happens to breakout traders? And if I make this a bit clearer, that's pretty hard to see. If I make this clearer, breakout traders, and follow me for a second, this is all logic. Breakout traders go long here. with their stop loss here. What happens when it comes down and then starts going higher again? What do breakout traders do? They move their stop loss, and let's make it a red line for their stop loss. They move it from here when they bought there to here. And that is why you see a big move come in there. And you are positioning yourself within this area, because this area is that. Okay, reverse everything I'm saying for bullishness. This is very, very key. Now, where will this form? That's the tricky part. Where will this form? It will form above previous hourly highs. Okay, these are previous hourly highs. You're looking for a sweep of them and then the distribution to happen. I had to explain it like this because I see no one else on YouTube explaining the logic behind why certain things work. This works because breakout traders originally have their stop losses there. They move them up when we start crawling higher to there. Let's dive into some real charts. I'll show you some examples of this. So let's look at NASDAQ here recently, and you have a dealing range there. This is your discount and your premium. Do not overcomplicate dealing ranges. The most obvious price swing on your chart. Now look what we did here. We came into a low inside of a discount. Now range lows lie inside of a discount. You want to pair those up. If we get a rejection like this, and we will revert to buy side liquidity in the next candle. Look what this looks like. We trade down into a discount. Again, you want to be in a premium or discount. Very, very important. Do not skip that. This will not work without narrative and logic. A lot of people on YouTube teach you patterns, which is cool, but guess why you don't find success with them and why you haven't yet? This will make you quit your job if you trade it within the right context. Now we commentate that range low and we reject from it. So where are we participating in? Ideally within that. Now that is really small. That isn't a strict rule in the sense you have to enter below the candles open. I would extend it. I would just double that range. Okay, so within that area generally. Now let's go into that hourly chart. If we go back to the hourly chart, the exact point we're trading, what is this? An hourly swing low. So previous hourly highs get tagged, and then you can enter either on a turtle soup or you can fractalize this idea. So an entry could be that, or you can fractalize this concept. So remember, this right here is the third candle inside of this swing point. Remember I said, how do we enter within that third candle? You are looking for a previous hourly low to be ran before continuation to the upside. So let's go on the 5-minute chart and let's head back over to that price action. And again, what are we looking for? Now the entry is easy. Has everyone seen this entry before? Of course we have, right? The 2022 model, where you break a swing high with momentum, we come back down into the FEG and rally. Why does it work this time? And why does it never seem to work for you? That is because it's within the context of the daily time frame, within the context of your higher time frame bias. That is a very easy entry. All of you can see that entry. I'm not here to teach you entry techniques. I'm here to change your trading. That happens with daily bias and narrative and logic on the higher time frames. The entry is the easy part, guys. People make so much money on YouTube teaching you entry techniques when it is the easiest part of your trading. Everyone, an 8-year-old could spot that as a 2022 model. If an 8-year-old learned the 2022 model, they could spot that easy, but it only matters within context. Let's look at some more examples. Carrying on with the NASDAQ daily chart, let's look at this when we come down and take the range low. Now, again, there's multiple examples in here, so let's do that first. I was calling this out to my Discord and my one-to-one guys. Previous month low was the target. Why? Because we have lots of liquidity down here and the time aspect. Now, I'm going to go on a little bit of a tangent. I won't get carried away because it is private level stuff. But if you think about time, the yearly candle opened back here. We created the low and we rallied. At some point, the high to close portion needs to be created. And when is that likely to be created? Naturally, at the end of the year. Well, think about this. If we're going to have a bullish yearly candle, when's the open to low likely to be created? At the start of the year, the first quarter-ish of the year. And then the high to close is probably going to be created in the last quarter of the year. So I've got that time aspect in mind. This is what I don't think anyone's taught that on YouTube. And I don't say that to brag. I say that to give you a realization of the little knowledge that actually goes into some of these YouTube videos. All right. Now, within that context of time on the higher time frame charts, now you can start looking at daily premium levels to hold price. Is this in a premium? Yes. So draw out your range there. That is in a premium. So it matters. So it's important. So you can look for shorts. And our draw and liquidity is lower because of that time aspect on the yearly chart. So do you see how all of this is built around higher time frame logic and higher time frame, what I call narrative, building a story behind why price should move. Now, what you'll see in here is obviously we're in a premium. And we've ran above previous day high into a daily key level. So again, what does this show up as? Well, it's our logic. It's our candle formation. If you take out previous candle high, close back inside this candle, the next candle is likely to trade lower. How do we position ourselves? Within the high portion here. Again, don't be too strict on the open to high bit. You can pretty much double that range. You want to look for entries within that sort of area. Again, hourly chart. Now, what you want to see is SMT or an hourly high swept. What do you see right there? Hourly high swept, okay? You see an hourly high taken. Now, here's a little something for those of you who have stayed to the end of this video or towards the 10-minute mark of this video. What you'll see is if we don't take an hourly high, you will trade into an hourly FEG. And it looks like I'm cherry picking right now. I promise you, go and back test this. Hourly FEGs or hourly highs, that's what you'll see. And right here we have that hourly FEG. So an entry can be within there and we can fractalize this. If you bring in time aspect, and I've spoken about 930 a lot in my videos, if you bring in the aspect of 930, you can position yourself within the distribution of New York AM session. All right, so we take a swing high, we trade lower. So is there a swing high in here, this price leg lower, for us to take? No. So you're looking at an hourly FEG. Look at this, inside of a premium market. If we reverse that, that is inside of a premium. Then you're looking for the distribution lower. So in this example, it may look like you're not positioning yourself within the wick. But if I remove everything here, where is that candle's open? There. Midnight New York, right there on that candle. Anything above here is a deep, deep premium because we are in a bearish market that is predetermined to trade towards the previous month low. Now, I've spoke about narrative a whole lot in my previous videos. I wanted to touch on it today. Narrative is why price should move. Why should price get to previous month low? There's a lot of reasons for that. And I can't explain it in one YouTube video, but watching multiple of my videos and joining me in the one-to-one, if you do want to join me, it's the top link in the description, apply over there. That can be explained over multiple videos. But in this video today, I want to give you a sneak peek into narrative along with why the daily candle's predictable and how you position yourself within that daily candle. And guys, if you look at the daily chart, you will see this happen so much. Here, we trade lower, open, we trade into previous day low. Here, we trade into a key level, previous month low. Remember previous month low here. Then we trade below previous day low as well. We close inside the previous candle here. So guess what happens? We at least, if I remove absolutely everything, we are now at least likely to take out previous day high. And where do we position ourselves? Within this area. So this is a high probability scalp. When you get a formation like this, it is always likely to take out previous day high at least. All right. If you have higher time frame bias ahead of you and you have higher time frame narrative of why price should move higher, then you don't have to just scalp it to previous day high here. You can trade higher than that, as long as you have bias on your side. Now, as a scalping model alone, you can trade to previous day high. Again, previous day high, right? We close above the previous candle's high, we take our previous day high. where do you position yourself? Within that wick right there. Where do we close? Above previous day high. So where do you position yourself? In here, in the Judas swing. Then we close above previous day high. Where do we position ourselves? In the Judas swing. Over and over again. And then we close back inside. And okay, let's say you take a loss there, trying to short this. Let's say you take a loss. The next day, close above, trades to previous day high. The next day, closes back inside, so you do nothing. Do you see how this didn't close above previous day high here? It closed back inside the range, so you do nothing. You sit out and you wait. If you do this, you will see that 70% of the time, price always trades to at least previous day high or previous day low if it closes back inside the previous candle's range. All right? So let's look here. Closes back inside the previous candle's range, so it targets what? Previous candle low. And you're positioning yourself within the wick here. Now, I don't want to ramble on too much longer. I will leave that with you guys today. If you did enjoy the video, drop a like. Grab my free course. It's the second link in the description. And applications for my one-to-one close in, forgot what day it is, in about 3 weeks. All right. So apply over there in the top link in the description, where you can book a call with me to have a one-to-one talk of how I'd get you profitable in the next 90 days. If you want that, it's the top link in the description. With that being said, subscribe if you guys are new and drop a like as always. I'll see you soon.